Nick, we're going to talk today about price. Like, does price matter? And we've talked about this over the course of the last several years together, but we're not going to just talk about it in final
Sure.
expense. We can have a Medicare spin to it as well, but we're going to talk about price in the business. So feel free to share some thoughts as I
Okay.
get this working.
Does price matter? Yeah, I think price matters. I suppose it depends on who you're asking, right? Does price matter to your prospect? Does price matter to you as an agent? Should price matter? Um, I right before we record this, well, immediately before we record this, I'm always talking to agents because I have, like, for my agency, I have a little office hours set up that ends right like 10 minutes before we start recording. And so one of the things that I was talking to an agent with immediately before this started was he was saying that he's been running into people lately selling Medicare um, that have plans that are like $100 a month plus, that are Medicare Advantage plans, not supplements. And so he asked this one guy that he was sitting with yesterday, he was like, "Why do you have this plan?" So it's a Medicare Advantage plan. It's $134 a month. It's got copays. It's got a maximum out of pocket, and that's a little lower. It's like a $3,500 maximum out of pocket instead of like the $7,500 maximum out of pocket. But otherwise, you're still paying copays. You've still got hospital stay copays. You still got other copays and stuff. Why are you having this? And he said, well, when I sat down with the person who signed me up for Medicare, she showed me something else, but then she showed me that there was this plan that was $134 a month, and I wanted the best coverage that was possible. So I said, let me have that one. And that
Interesting.
was all of the thought process that went into it. And the agent was like, okay, and signed him up for that. I guess. So price matters, right? Price is perception a lot of the times. What you are perceiving as the value of what you're buying oftentimes is reflected in the price. And I think all of us would be foolish if we did not take that psychological aspect of things into account.
I've got us
Does
live on a couple places now. I had to share it to Facebook to make it work. So I appreciate you covering for a few minutes there.
Yeah,
On that note, though, with the Medicare thing,
yeah,
there are some Medicare plans that do cost money that do have a place in the market, especially in different
yeah.
regional markets with different good and bad that comes with Medicare Advantage. Without getting too far into it too early in the conversation, there are plans even on that back half of Sunfire that show a monthly premium that scares some people
Mhm.
away. But why might an agent want to look at those where price may matter and to pay for something that might otherwise be zero premium?
Well, because especially I think sometimes if you're looking at some of the plans that have reasonably low premiums, sometimes you really do get a lot more bang for your buck. So I can
Mhm.
talk locally. There's a plan in the county where I live where I don't really work very much.
Mm.
Um, it's the not the right demographic. It's not an old enough population to be like target rich. But I work a little bit in my home county, and we have a plan here which is a legitimately great plan. Like, if I could sign up for this as health insurance, this would be better than my health insurance, and it's $29 a month,
Okay.
right? It's $2,500 a month. It's a $3,000 maximum out of pocket. It's a flat $325 for a hospital stay. Doesn't matter how long you're in. You could be in for 5 years, and they only charge you the $325. They put no upper limit on it, which is crazy. I can't think of another plan that puts absolutely no upper limit on your hospital stay length. Um, surgeries are inexpensive. You can have like an outpatient surgery for like $100. Like, it's a really, really solid plan. $10 copay for specialists, $0 for primary. Like, really great plan. Really great plan. But it's like $29 a month. And for most people, they're not going to offer anybody a $29 a month plan. It is a dramatically better plan than any other Medicare Advantage plan that is available on the market.
Well said.
Um, and and people should be offering it. And listen, The plan is designed, if you have a low income subsidy, it zeroes out the price. So it's designed to be a low income subsidy plan. The carrier is not expecting anybody that's not on a low income subsidy to sign up for this plan. But I will tell you, I have a number of clients who are not at the very bottom end of the economic spectrum, who I've shown this plan to, and they've been like, they've jumped at it. They're like, $29 is such a good value for everything that you get. You know, if you're looking at it to be insurance, if you're not looking at this as a supplement to your income, if you're not looking at this as a way to supplement your food stamps, you know, if you are a reasonably economically stable person in retirement, which, and I get it, not everybody that we talk to is,
No.
but if you are, it makes a ton of sense. Like, why would you choose the plan with the $50 copay and the $200 a day hospital stay, and, you know, $500 for a surgery and $300 for an MRI, um, and the deductible for your drugs, and a $10,000 maximum out of pocket for $0 with maybe a give back, when you could pay $29 a month and have health insurance that is better than any health insurance that you've had while you were working. And it's very inexpensive, and for many people, they can definitely handle that.
Yeah.
Not everybody, you got to know your prospect, right? But I would not be afraid of that plan. I'm not afraid of that plan. I sell that plan.
Yeah. I
So,
think there's another one. I don't know if we're talking about the same one. It's a IBC Elite. It's a
not
PPO. I think
not
it
the
costs
same, but a
money.
similar idea. I know
Yeah.
that one too.
And if you compare pound for pound, the cost of the monthly premium is well more made up for the things that it actually does if it's someone that heavy utilizes their insurance.
Yeah.
So don't be afraid of the ones that cost money. Nick, there's a regional plan in Maryland that it was, I don't remember what it is this year, but last year it was like $129 a month. It was relatively comprehensive and in an area with almost no good MA plans. And it was almost like a supplement replacement. Have you seen situations before, maybe PFFS plans,
PFFS plans, yeah, sure.
where they cost a good amount of money? They're not exactly your low, they have a place. What place do they have?
So for me, the place that they have is for people who had been on a Medicare supplement plan, who can no longer afford their supplement plan and cannot qualify for a new underwritten Medicare supplement plan. And I have a client who was in this situation. You know, he's when we signed him up when he was 65, and that was 5 years ago. And his supplement has now gone very expensive. And he's developed some health issues. You know, he's had a pacemaker implanted since then. He's insulin dependent diabetic. He wasn't at the time. You know, he's had some things happen, and he uses his insurance. There's a PFFS plan out by me that has a $1,000 maximum out of pocket, and it's PFFS. So, like, don't have to worry about any networks, right? $1,000 maximum out of pocket, and it's $100 a month. And he was going from paying $425 a month down to the $100 a month. Keeps the same prescription plan, which was important because finding a different prescription plan was really difficult. A plan that covered all of his medications, and his current prescription plan is actually working really well for him. And it's one of the very few that does. And this plan doesn't come with a lot of bells and whistles, but it also has next to no copays and a $1,000 maximum out of pocket.
There we go. If you guys are watching, feel free to say hi. I have a feeling that the Facebook algorithm has suppressed me today, and I didn't say anything political, but that's okay. If you're watching today, and I'm sure Nick's going to share it out on his end and make sure others can see, we're talking the age-old truth in the business on both final expense and Medicare. The next 15 minutes. Does price matter? Nick shared some thoughts on when price actually does matter compared to zero premium plans on the Medicare side. Let's transition over in our next 15 minutes and talk on the life side. Now, Nick, I caught you doing something this week that John Duggar would never do. And it was a perfectly great plan, but you sold American Amicable. Now, John Duggar's convinced John Duggar is convinced American Amicable is actually disguised as the devil, but I think they're a decent company. They have a great process, average rates, but a great process. Now, in that situation, I think you picked it for underwriting purposes, but just talk about process winning over price in some situations.
I mean, sometimes listen, you can only sell the policy that you're going to get placed. It does, like, there is no point in writing a company that's not where you can't place the business. If they're not going to take it, and you know this, you're wasting your time. There are instances where maybe, especially in the modern age with algorithmic underwriting and Millman coming in and who the heck knows, maybe there are times when, like, throwing the spaghetti at the wall and seeing what sticks is the way to go. Sure. But there are instances where certain companies will take explanations, and American Amicable is one of those, and they are not the least expensive company, but they're not the most expensive company. And call me old fashioned, I have gotten to the point where I prefer companies that don't do the crazy instant underwriting. I am starting to see the beginnings of what I think is a trend of a lot of these companies that are using the algorithmic underwriting to go back and re-underwrite month 20, 21, 22, 23, and either re-rate or rescind policies. I can think of two companies off the top of my head, which we won't mention. One company is going through and doing mass rescissions using Millman's continuous life underwriting. And they're saying that they're only rescinding things if at the time of the application things weren't disclosed or didn't match. But talking to agents, policies are getting rescinded for things that were disclosed or for things that were not actually on the application.
That's just wild how that's
which
happening.
Yeah. And then there's another company, which is an extraordinarily popular company, which I wish that I could mention them by name. But I don't write them a lot. I've only got a handful of clients. And I called because I got a lapse notification from one of them. And I called them up to find out. I called the client up to find out what happened. And she said, "Oh, they changed my rates on me. Those bastards, you said that they were never going to raise their rates. And they raised their rates on me. So I told them to screw themselves and cancel my policy." I was like, that's weird. So I called the company and they were like, "Oh yeah, no, we do that." And I said, "What do you mean you do that?"
You do what?
She said in month 18, we re-underwrite everybody. And if they weren't rated appropriately, we re-rate them.
That's wild.
I said, "What do you mean you re-rate them?" And she said, "Well, we send them out a letter telling them what the correct rate is, and they can either sign off and accept the higher rates, or their policy will lapse for non-payment of premium."
Interesting.
And I don't even know how that's legal.
Mind blown. Yeah, it's probably it's immoral at the least.
It's at the very least immoral. I mean, I'm not a lawyer. I don't know if that's something that's legal in their contract, but it's crazy to me that that's something that can be done on a whole life policy.
Yeah, it's only legal because their lawyers are better paid than anybody that could muster a different lawyer to argue that in civil court.
Right.
I just messed up. But in the era where we went from paper applications just a few years ago and 18 signatures and having to get home at 8 o'clock and to fax them in to, thank God that's not the reality anymore. Now with very quick instant processes, as we just went from 2 to 6. I swear I'm suppressed and you're not. I think that there is some concern. Like, is it too good to be true? Whose fault is it? No, Robert, we can't tell you because we're still contracted with them.
Yeah, but no, I'm not. Very popular company though. It would not be difficult for you to figure out who this company is.
And I wonder because they're using a similar application company that other carriers are using that are all rooted in probably a similar underwriting engine. It's weird. Like, who is it and what do you do about it? Can you do anything about it? In a realm where you picked American Amicable for their more traditional underwriting, which is their decision engine, and then a human if they need it. What other companies do you feel comfortable naming, if any, that fall into this traditional realm?
I mean, at this point, like I actually like companies that are going to still use MIB and script check. Is that a crazy thing to say? Like if they're heavily relying on Millman, I am nervous about all of them, and this may very quickly get to the place where every company is using Millman. I don't know.
Maybe, which makes it challenging for like Toolkit, because the Toolkit was built off of an era of black and white underwriting, or semi gray haired underwriting, like 39-year-old gray haired underwriting, but like generally speaking, black and white. And you've got products like Americo that came out, and I don't say this in a deflammatory fashion. They don't publish their underwriting guides, so the Toolkit can't create underwriting guides, and you're left really kind of wondering, well, what's going to qualify for it?
Yeah.
I've written a bunch of them just to test it, and it really does feel like a preferred standard product, like many others are chassied behind. It's not anything surprising, but they don't publish underwriting. Just like with Combined, they do the 5-question jazz, and then
Who knows, right?
who knows? How are you supposed to underwrite that?
Right. Well, and this is the thing, and it's a thing that, like, if you're captive to the company, it doesn't matter, right?
So be it.
Right. If you're captive to the company, you're just, and so it's a thing that I expect from companies like Combined, Physicians Mutual, companies that have even Mutual of Omaha, like companies that have like really large captive forces, where they've really built their business around that captive concept, where everybody's just going to be putting everybody with that one company. And hey, listen, I sort of feel like if you're an independent agent, you should kind of sort of make yourself intentionally captive yourself to one company. Find a company that you think works really well and just write them as often as you can, and try everything with them. So yeah, I mean, maybe if you're going with a company that does algorithmic underwriting, to start off with as your primary company, that's not the worst thing. And then as you pivot, but then when you pivot, you've got to know who you're pivoting to, right?
Mhm.
You can't pivot off of an algorithmically written company and go on to another different company. And I
Let's
mean,
talk
yeah,
price for a second in the sense of the agent's perspective, because some of the
yeah.
like some carriers with really, really aggressive pricing nowadays have garbage renewals, and we talk renewals to death. But would you pick, if all other things are equal, maybe not equal, but would you pick a carrier with semi-average pricing with great renewals and a great process because you're going to get paid longer? Like, I don't remember a surety being super cheap, was it?
It wasn't. No,
No.
no. I mean, it's got to be. It has to be competitive though, and like the goalposts for what is competitive have moved over time,
Yeah, because
right?
the pricing is sort of kind of sandwiched itself less aggressive too.
It really has. So like when you're looking at a quoter, sometimes like the 14th or 15th company down the quoter, depending on, smoker, non-smoker, male, female, age range, right? But like oftentimes you can go like the first 3 companies on the quoter are dramatically less expensive than everybody else. And then like the next 10 companies are all like $5 more expensive than the first 3, and then like 10 to 20 cents different from each other.
Whoop-de-doo.
I mean, if you're in that pack of 10 to 20 cent different, like I'm going to want to write the company that pays me renewals or that has an easy process.
Yeah.
If I'm writing one of those companies, I'm going to want to pick the one that is the most friendly, right? When everything else is otherwise equal, and maybe sometimes, like maybe sometimes one of those first 3 companies is not appropriate for whatever reason, right? You can't write the least expensive company for
Everything.
any variety of reasons. A lot of times they're the least expensive company because their underwriting is extremely restrictive and they just don't
Mhm.
take a lot of people.
Or the process sucks, or the back
Or
office is
so
garbage, or
something,
nobody
right?
answers the phone.
Right.
Um,
Yeah.
it's just, I think that what's interesting about the whole thing too is that as the pricing has sort of like sandwiched itself closer to the middle, as the underwriting has gotten more nebulous, the decision making that we make, maybe we're getting older in the process too, has kind of evolved in a way. You've written a lot of business. Have you ever been ethically replaced?
No.
No. What is a bigger concern? Let's try this question. Are you more concerned about if, say, you wrote nothing but average, even semi less average, all the time? Would you be more concerned about somebody replacing you ethically, or Miss Johnson lapsing her policy from bad process or product issues or just irresponsibility? Which is a bigger concern
No,
in your
absolutely.
perspective?
That I 1,000%. I would be much more concerned that they're going to lapse, or that they're going to um, unethically, or not even unethically, but like
Dirty.
foolishly replaced.
Yeah.
Yeah, not even ethically. Like, it might not have anything to do with ethics. It might just be like they talk to somebody on the phone from Globe Life, right? And they get something that's entirely different, or they talk to somebody from their credit union and pick up an accident
Hmm.
policy, and they drop the whole life because they don't realize that it's not the same thing, right? Um, that's the sort of thing that happens much more often than somebody coming in and beating me on
Right.
price. That's
And,
it.
and the
Yeah, it just doesn't.
Yeah. And the fact is that these people don't get healthier. They're not getting younger. The pricing isn't becoming cheaper. I mean,
Yeah,
just look at the Falcons. They came out with an amazing product on the iCover platform, which is
yeah.
the best platform out there. And within a year, the rates had to go up because I don't know, maybe more volume than they expected. But even the case I ran into in our neutral zone,
Mhm.
Chester, Pennsylvania, it's like where the Romulans and Klingons fight it out. Um, I mean, the man did not get any healthier, and either he didn't take his shoes off when you met him, or he lost toes since I met him. But that's a perfect example of
Yeah,
where it was an averaged price policy. There might have been something cheaper, but by no means does this three-toed man qualify for me to replace what you wrote.
yeah. It, yeah. I mean, it is tricky, especially if you are a professional and you are, looking at everything when you are in the home with somebody, and you have the tools in your you have the arrows in your quiver to be able to go, like, nail down the one specific company that's going to take a person who's in a very specific situation. um and with American Amicable, like, at that point, I know we had put notes into his application because
He was
he
sick.
would have been he was tough to get placed.
Yeah,
And American Amicable is willing to look at reasoning for why this would work.
yeah,
And it's working out for him. It's a few-year-old policy, and
yeah,
he's still got it. He's alive,
yeah.
he's making his payments. So
Does he still have did he have the massive TV in his efficiency when
yes.
you met him?
Yes.
A
Yeah.
but one of the cool things about final expense clients is the pride they have in some of the most simple parts of life. We need to take more credit for. Like the building he lives in has gone downhill precipitously over the last 10 years. He does not live in any form of like flattery. The man didn't have hardly any clothes on and no shoes on, but was so proud over the fact that he took his stimulus check and bought this massive TV.
Yep.
And I'm like, yeah, that's pretty cool, honestly. Like, that's a good use of your money. You could have spent that on any number of more irresponsible things. I think the final expense clients should teach us and Medicare clients two things: how not to become many of them,
Yeah.
and what lessons they've lived that you shouldn't repeat. Like,
Yeah.
you see where I'm going with that one?
For sure. I listen, I've talked to a lot of final expense clients who have lived wild lives. One of the best things about this job is the people you meet have just amazing life experiences. Um, it- Being a final expense agent has made me more aware than ever of put money away and save money. Oh my god, because I talk to people somewhat regularly who had money at one point in time
Mm-hmm.
and just didn't manage to hang on to it. And that one always hurts.
Yeah, I think what an interesting point here. Melvin brought up a good comment, and I
Mm.
appreciate he watches a lot of our conversations. I think price matters in the sense that a lot of agents, this is how I'm taking it, are so worried that if they don't sell the cheapest thing, the person won't buy because they haven't created enough value to make a decision. When value exceeds price, people purchase things too. So I think it's important we understand, if price was so important, would Colonial Penn exist? No. Colonial
No.
Penn doesn't exist based off of a price valuation. Senior Life doesn't exist off of a price valuation. Nick, I had an hour-long conversation with Ron Powell this week,
Mhm.
and an interesting point he made is that the company has to make money. And I'm like, you're right, Ron. It's not a charity. I absolutely
Yeah.
do understand that perspective from the top down. So we have to make money. A lot of these low-price leaders nowadays are paying as earned. I'm sorry, most of us still have to make money. So
Yeah.
price does come into play on the leg of the stool where it's the agent operating their business.
Yeah. No, absolutely. And you have to do what is best for you, as long as what is best for you is not bad for the client.
No,
Right?
balance.
Right?
Yeah.
Yeah. But again, in that all other things being equal type of scenario, why would you not go with the company that is going to be easiest to get the policy issued, or is going to pay you the most, or is going to give you the best renewal, or is going to the things
Exactly.
that matter to you, is going to fight to keep the policy on the books,
It's not going to
right?
re-underwrite it in 18 months.
Yeah.
It's not going to
Um,
terminate the distribution, so it's hard to service your business. That
yeah.
sucks.
Yeah.
Unfair. So
Yeah.
in closing, I was trying to come up with another one for you here. These companies, if you could tell them something that they would, implement when it comes to price, process, product, hopefully, we have a chance of getting Ron Powell on to do an interview, which would be pretty awesome.
That'd
What
be great.
president of a carrier would have the nuts to even do that? Most of them wouldn't, even though we love them. If you could tell a company something, what process or product or price change do you think the industry needs right now?
Honestly, right now, I feel like the algorithmic underwriting is something of a disaster. And I get why it seems like it makes sense. But it's not accurate enough. It's catching out too many people who would be good clients, who would be good risks. And it's filtering them out. It's letting in people who would not be good risks. It's not catching the people who are bad risks. It's not doing what it's intended to do.
Hmm.
And although it is faster, and boy, agents love fast. And
Yeah.
listen, I am guilty of this. Um, I went away from writing a company that was like one of my number one companies for years and years and years, and I stopped writing them for almost 2 solid years because they weren't fast enough for me.
Yeah.
And I feel like that was short sighted. In retrospect, I probably should put up with the PHI and some of the other things because of all the other things that this company does for me.
I just don't know how to do it. Nick, I don't have a problem
Yeah.
calling Alterwood to verify someone's Medicaid status in Maryland because I kind
Mhm.
of enjoy Nick, we're going to call a local number and just verify your Medicaid status. And they see me calling a 410 and they talk to a real person. I don't mind that kind of semi third party validation,
Mhm.
but I haven't done a phone interview since I had a client decline for Trinity probably 2 years ago. I just, I
Yeah,
don't know. I don't know how to
I get
run
it.
I don't know how to run appointments on the hour every hour and drive in a semi-rural environment and ever get to all the appointments. I
I
just
know,
don't
I
know how to
get it.
do it.
It's a weird balancing act, but it is one of those things where you know the companies that take a little bit more time and do things in a little bit more of a by hand way
Mhm.
tend to do things like Trinity is a good example. They will fight to keep your business on the books.
True.
Foresters will fight to keep your business on the books.
True.
I'm not even contracted with foresters anymore,
Me
but
neither.
they would fight to keep your business on the books.
Yeah.
If you go to replace a forester's policy, that agent has a phone call or an email from foresters before you've left the house.
Yeah. I learned
Like
that one.
they are
Yep.
they are on it.
I learned that
Um,
one.
like I think that as agents, we need to be more concerned with those sorts of things. How well is the company's back office going to support us
Mhm.
and keep our business together, and less concerned with how absolutely lightning fast can we get through an application.
Yeah.
I also think there is something that is being lost. And I don't know. I don't have numbers on this. I've never tracked this. It's just a feeling
Intangible.
that I have of, when you do an application that only takes 5 minutes and then you're out of there,
How
I
serious was it?
feel, I feel like they're not as committed. The client is not as, they didn't have to invest anything into it. They don't have any skin in the game.
Hmm.
We talked in the last video about skin in the game, and I think there's an element of it's got to be a little bit of effort on the client's part, and you have to trust yourself as a salesperson that you can guide them through that
Yeah,
effort.
did it for
Um,
years.
right? It's got
I'm
to they got to work for it a little bit.
Yeah, I'm wondering because we're working on building a relationship with Old American. I think I'm going to
Mhm.
get you on the Old American train one of these days, just because the renewals are retarded, in a
Makes
complimentary
gives me
way.
the willies just to even think about it.
How is this possible? Because we're on the precipice of becoming the sole agency responsible for what I call the colonial region. That doesn't sound good. Sorry, the
Yeah,
Liberty region,
sure.
Pennsylvania,
Yeah,
New Jersey, and all of New England. I got an email from the office today about somebody who lapsed their policy but is now requesting to increase their coverage, or like that's the kind of stuff that we don't really get to experience on the purely broker side of things. Where I had one come up from Massachusetts. I sent it to an agent in that region, someone that wanted to get more insurance. Like that's pretty cool.
that is pretty cool. I mean, that is legitimately pretty cool. I have such mixed feelings about Old American because of all of the Old American agents that I have known, and it's probably not fair. It's probably not fair, but I definitely have some inherent biases that that I would need to work through.
What was it? What was that guy? We can't name names, but he sold a lot of American Amicable,
Mhm.
and he wrote himself down as the beneficiary once on the client.
Yeah,
He did all kinds of like, how is this legal
yeah,
shit across the
yeah,
Philadelphia metro area?
yeah.
But
We
in
yeah, I
Old
know exactly
American,
what you're talking about. He lived right
yeah,
there in Alton, right?
yeah, and
Uh,
but that didn't give you a poor taste in your mouth about Am. That was just a bad actor, right?
Right, that was a bad actor. Um, it's when you start to see repeated bad actors who are all associated with the same company that it
Mhm.
becomes like, what's up with this company?
Yeah, I
You
think
know?
there's some new blood that's due to clear out that kind of actors.
Yeah.
Let's wrap on this question Melvin brought up, and we always appreciate Melvin's interaction. What if the best price product declines? Then you're stuck because you have them sold on the price and nowhere to go. I think in the era of phone interviews, we were always very cautious about not selling the carrier until the carriers approved them. You get
Yeah.
them so excited over Foresters and the member benefits and all this stuff. The proposed insured does not qualify for the product. Goodbye.
Get
Well,
the approval.
crap.
Yeah, get the
Crap.
approval first. Always get and really always get the approval first, right?
Mhm.
Right? Even today, at this point, listen, if you're gonna go with the algorithmic underwriting, one of these e-apps takes like 3.5 to 5 minutes. You could try 4 different carriers before the client knows how
It's,
many places you've I mean,
it's crazy.
like, congratulations, you've been approved with this company. Like, I don't know.
Yeah.
Um, like I don't know that that's like, I don't know. I don't know that that you really should be like running people through 5 carriers in a single sitting. That might raise some red flags, but you
They're encouraging
definitely
it.
could. Like
Yeah.
you definitely could. In the amount of and again, this is what I think started the problem with that whole process. It is actually like too fast.
Yeah.
They're not committed to that carrier. Um, but yeah, I don't I mean, I don't close that way anyway, right? I don't
Yeah.
close on like, this is the cheapest $5,000 carrier you're gonna get. This is like that's not my process, but um, do the right thing, right? Do the best you possibly can for your client, and it will always work out in your favor.
Yeah.
The real question is having an understanding of the complete picture as to what is actually the best thing. And the best thing does not mean the lowest price. The best thing means actually the best thing.
Well
Um,
said. Could it be that I had 93% persistency with Transamerica because it was so freaking real for them to sign their name 13 times and so
right.
freaking hard to get the business through and issued? And they were so freaking good at drafting on time
Mhm.
that it never fell off the books. Could it be?
I think there's something to it. I really do. I yeah.
Comment below. Let us know what your thoughts are as you watch today's February Live special. Does price matter? Final expense Medicare. If you're not subscribed, I don't know why. We appreciate you guys that watched, commented, Melvin. Thanks for watching, and we'll see you guys next week.